What's up, traders? Zach here from the Trading Network. Hope you guys are doing well. It is Tuesday, February 23rd, and I've got another daily market profile recap for you. So digging into the key levels first and foremost, starting off with 38.99, which was the prior range high from yesterday's New York session. Second key level I was interested in was the overnight high, which was just a few points below that at 38.96. The third level I was looking at was the overnight point of control at 38.8675. Fourth level was the prior value area low at 38.72. And last but not least, last level I was interested in as a key level this morning was 38.40, which was the overnight low. All right, so now that I've got the trade plan up here, just to reiterate those levels real quick. First one, 38.99. This was yesterday, again, Monday's range high from the New York session. Second level was 38.96. That was the overnight high right here. Third level was the overnight point of control, which was 38.8675. That was this level right here. Prior value area low. This was Monday's value area low, 38.72. Really tight session that we had on Monday. And again, last but not least, that 38.40 level, which was the overnight low. So moving down into the news events, headline risk, we had Jerome Powell speaking today, and as many of you know, that always makes for some interesting price action, a lot of uncertainty, and typically some volatility that follows. So with that said, overnight inventory was balanced, which means that the settlement price from Monday was in the middle of the overnight profile. We were looking to open below range in value in relation to yesterday's profile, which means that there was a higher probability of trending price action. Again, for those of you guys who know a little bit about market profile, those of you guys who have been watching my videos, you will know that when we open outside of range in value, that means that there is a higher indication of trending price action. Now, with that said, because we opened with a gap between New York session low from Monday, and again, this is our opening here, right here at 38.50-ish, that means that the gap and go scenario is in play. The gap and go scenario means if we are trending, if we open up with a gap between, for instance, the New York session low and the open for the next New York session, then there is a high probability of continuation of that overnight trend, a downtrend in this case, if we do not quickly move up and close that gap. So you can see that the gap was at 38.70. So my thought process was if we could move and hold above the overnight VPOC, which was right here at 38.55. That was my line in the sand level. You can see right here. Then I was going to be looking for a move upwards to close that gap. However, we did not get that. We got essentially rejection as soon as we opened, and we got a fierce push downwards. So just to read through my plan here a little bit, the gap and go rules apply here because we are opening below the previous regular trading hours session from yesterday. If we did not move up rather quickly and close that gap, then I was going to be looking for continuation of the overnight price action, which is what I mentioned just a moment ago. Now, a move upwards to close the gap would or could likely offer up some short opportunity if we do not get acceptance above that level. And on the flip side, again, if we did move and hold above that 38.70 level, then I was looking for, a move back up into Monday's levels, which we did end up getting, but towards the very, very end of the day. So based on this, I was looking at that overnight VPOC at 38.55 as the line in the sand level. If price could move and hold above that level on open, then I was going to be looking to take long opportunity towards the prior range low to close that gap from yesterday. If we could not move and hold above the overnight VPOC, then again, I was going to look for a move down to the naked POC from the week of February 1st at 38.27. And we did indeed get that move, and we got a nice move lower as well. So moving down into the scenarios here, you can see that, just to reiterate, that overnight VPOC, which was right here, this volume point of control, I'll give you guys a better look here. All right, so just wanted to load those levels real quick so you guys could get a better view of some of these levels, the overnight VPOC in particular. The volume point of control, if you guys have watched my market profile setup video, I have them highlighted cyan, so you can see this brightest cyan bar right here. These are the VPOCs, and the pink levels are actually the point of control. So that's the POC from the TPO, from the market profile, if you will. And this right here is the volume point of control. So this is where the most volume is done, and this is where the most time is spent. So now with that out of the way, let's move on a little bit deeper into the scenarios. So again, if we could hold that level, the overnight VPOC right here, I was looking for a move back up into these levels, more specifically to close this gap. And if we could not hold that level upon open, I was going to look for shorts down to a weekly profile level. So let's hop on over to the weekly profile. And this level right here is the point of control. It was a naked POC until we tapped it today, but we closed it. You can see that this profile, or I'm sorry, this point of control right here got closed in this session. So just for comparison, you can see this 39.28 level is still naked POC. The line is extended all the way to the end of the chart, showing that that is a point of control on the weekly chart that has not been touched in a regular trading hour session since it was formed. So keep in mind that 39.28 level, that is going to be a major area of interest and a major area of liquidity if and when we do move back up into that area. So let's dig into the summary and start to wrap up here. All right, so moving back into the session profile here and into the summary with the targets. Again, line of the sand 38.55, and let's go over the upside targets that I was looking at briefly, just because they really didn't get hit until the end of the day. So you can see that upon open, we opened, if I zoom in here and look for O period, see our open was 38.49, right around this level. The initial balance high was 38.50.25. So that means that we did not move above 38.50.25 in the first hour of the session. So we opened up, we got a brief test, and then we moved right back down, took out the overnight lows, of course, and proceeded to move actually through that weekly POC, which ended up being within 1 point of today's value area low, which is pretty interesting. So with that said, the upside targets that I was interested in, first and foremost, 38.61 was the overnight low from the overnight session of February 21st into February 22nd. So that was upside target number one. Number two was 38.70. Again, that was that gap closing level. That was yesterday's range low from New York session. Third upside target was 38.80. Now 38.80 was another regular trading hours low. That was the February 18th regular trading hours session low right here. The fourth upside target was 38.84 to be precise. And you can see that this was the point of control from yesterday, Monday's session as well. So that was a naked POC indeed, and we closed that as well today. So we closed two naked POCs. We closed one from the weekly profile at 38.27, and we closed one to the upside at 38.84, which was a beautiful target that was indeed hit in the later period of the day. The fifth upside target was 38.8675. You can see that was the overnight point of control, which was right above that by about 2 3/4 points. And last but not least, the final upside target, the only upside target that did not get hit today, was 38.96. That was the overnight high. So all in all, we had 5 out of 6 targets hit on the upside, and we had 5 out of 5 targets hit on the downside. Pretty incredible day. It was an 87.5 point range on ES, which, if you guys are trading this often, that is an immense amount of opportunity. With that said, as Jim Dalton says, with greater opportunity comes greater risk. But as long as we are managing our risk properly and we're taking these, high opportunity plays to our advantage, then, our risk should be managed appropriately, and we really don't have anything to worry about. Now, with that said, let's dig into the downside targets a little bit more specifically here. Again, just to reiterate, line in the sand, this 55 level. So we didn't even get there. First downside target that was hit quite swiftly was that 38.45 level. 38.45 was another level from the weekly profile. You can see this right here. That is the point of control from the week of January 25th. So that was hit swiftly on the open. Next level to the downside was 38.35, and actually I will go right back to the weekly profile here because that was also a weekly profile level. So this was the point of control from the January 18th weekly profile. And you can see that I'm using a lot of weekly profile levels for these downside targets today because we had not explored this area to the downside in quite some time. So when that happens, I'll either load more data on my session profile or I'll just look over to my weekly and look for important levels that are on a larger scale or a larger time frame, if you will, even though we're not really using time-based charts. So with that said, the fourth downside target was 38.16. And 38.16 you can see was once again a weekly high here, and that was the weekly high from the weekly profile of January 11th. And last but not least, of course, the final downside target that was hit today was 38.11. Now 38.11 was obviously just a handful of points below that previous target, and that was the value area high of the January 11th session. So all in all, again, we got massive opportunity today. If you were able to manage your risk properly, even if you took bad trades or poor entries, which is pretty easy today because it was extremely volatile, and if you were able to cut your losses quickly and admit you were wrong quickly, you had a lot of opportunity to get right back in the market and dig yourself out of a hole, or build up that P&L even greater than it was previously. So that is why I love to use market profile in combination with these candlestick charts so often, is because it really does offer up exceptionally high probability opportunity. So I will show you guys a few things here. So before we wrap up here, I want to show you guys a quick example of how I'm using time-based charts in combination with the profile. Many of you guys who watch my videos often, you may be starting to get an idea of how I'm using this information together. So you can see here, a lot of these indicators are part of the Trading Network proprietary indicator package. This is the New York opening range. This is the opportunity zone. So just for a little bit of context, at least for the previous hour and a half, 2 hours prior to New York Open, we were in a bit of a downwards move. We were making lower highs, lower lows, and for the most part rejecting in or around this opportunity zone. Now you can see that New York opened, we had the opening range form, and essentially instantly on open, we formed the high. This is the New York opening range high, and we could not even get back to the highs. We then got rejected below this opening price. This is this pink dotted line, and we proceeded to move lower, make lower highs and lower lows continuously here. So off the open, as soon as you see something like this, when you know that we have a gap and go in play, or possibly in play, right, you can say, okay, if we don't get picked up to the upside quickly on the open, then I'm just going to continue to look for opportunity zone shorts and allow the trend to be my friend. You guys have heard me talk about this a lot, especially on the upside recently, where we've had a lot of upside gap and go plays. Here's one on the downside. Overnight session was in a downtrend. New York picked it right up and continued to push price downwards. There was no interest from other time frame players, higher time frame players in buying price in this area. They did not find it fair value. They did not find this as a good buy at this point of the day, and we proceeded to move down swiftly. And you can see, I mean, just using the opportunity zone indicator, it's pretty incredible, no pun intended, what kind of opportunity that you can get. You see price continuing to reject, and as we say all the time on the live stream, it works till it doesn't. And this, my friends, this worked for a long time until it stopped working today. So you have exceptional trending probability on the downside, and then look, a beautiful change in behavior to the upside, and you have opportunity zone plays, or opportunity zone opportunity, if you will, on the upside as well. So just wanted to point that out, show you guys a little bit closer of a look, in regards to how I'm using both of these things together. Market profile is excellent in many, many ways. It gives us context, it gives us confidence in these levels, and it lets us know where the large players or the other time frame players are viewing price as fair value, undervalued, or overvalued. And with that information, we can take really high probability trades, not have to risk very much at all, and really have a extremely simple way of trading on days where most people are just getting destroyed, trying to catch bottoms over and over again, trying to be a hero, trying to go long, when really throw up the opportunity zone, see that it's working, and you can really just let price do the rest of the work. So with that said, I want to thank you guys very much for taking the time to watch these videos. Greatly appreciate those of you who take the time to like, comment, and subscribe. If you do like what you see, please check out the links in the description down below, where you can find, first and foremost, a link to our Facebook group where you can get these free trade plans every single day, Monday through Friday at 9:30 a.m. Eastern Time. You'll also find a link to our website, thetradingnetwork.io, which will give you information on one-on-one mentorship with me. You can also get info on joining our private Discord, where you can watch me and the Trading Network team trade live on a daily basis, again, every Monday through Friday at 9:30 a.m. And you can get access to the Fundamentals of Futures Trading course, which is our comprehensive trading course that goes over varying strategies for different market conditions. We provide strategies for trending, such as the opportunity zone, and we provide strategies for ranging price action, such as the momentum flip, which is a strategy that we use mainly based on our momentum oscillators. Last but not least, you can also get access on our website to the Trading Network Proprietary Indicator Package and the TTN Indicator Package bundles, which include the Fundamentals of Futures Trading as well as lifetime Discord access. If you guys have any questions about any of the products, please feel free to leave a comment, reach out on Facebook, shoot us a DM on Instagram, anywhere you can find us. And thank you guys so much. Once again, I appreciate you, and I will see you in the next video.